Oh, here's Meta. Holy smokes. $7.14 estimated was $5.89. They killed it. Revenue
Wow.
47.5 billion versus 44.8. I mean, they did just that's not a big, that's not a little miss. That's a huge. Wow.
Cool. We're live now, by the way, everyone.
Perfect.
We are live again on YouTube. Hopefully all the viewers come back in. They'll probably get a notification anytime soon. We only have one viewer, which is me. So
I just joined.
Is it the same link? Send me a link. Or put the link in the chat.
Yeah, I can send it to you.
Yeah.
There you go.
Oh, perfect.
It says chat is disabled for this live stream. Backend, if you could re-enable the chat so all the viewers can communicate with us again, that would be that'd be spiffing.
Jeez, what a move. Yeah, Meta's off to the races now. $50 a share.
We're gonna start covering corporate earnings on this call.
When they do so much better than expected, I mean, it's just crazy.
Yeah, Meta.
Qualcomm down is down 5% right now, so I guess Qualcomm didn't do too well.
Yeah.
Oh, they beat estimates as well. I mean, I'm just reading it.
It might be projections then. It's probably forecasted projections are lesser than expected or something like that, if that's the case. Or forward guidance.
Just to let the viewers know, we're getting viewers coming into the stream now. Just to let you guys know, the chat will be enabled soon. I think there's just a few clicks of the button or something the back end needs to do. We do apologize for the downtime. There was some major connectivity issues. Everything just crashed. We do apologize. But yeah, we are back. We still have another 20 or so minutes of trading. And yeah, we do apologize again.
So I don't know, kind of to just further the conversation. I mean, of course, there's always something to do, right? Even if it's, well, I guess doing nothing. But what do you guys like look for? Like you can pull up pretty much like any commodity or futures contract. Obviously, after a huge dislocation to the downside, to the upside, what is like the first thing that you guys are going to go out looking for? Identifying historical levels, or is it like Fibonacci levels that you're going to start drawing to kind of see where things are going? Like what's like one of the main things that you go to try to start figuring out where that market is headed?
I was going to say I can answer this for myself real quick.
Yeah.
The first thing that I look at specifically is Tony. I'm a market profile like TPO chart guy, so I just look at the auction sessions on a daily basis, and I'm just looking at where time is spent along with volume on 30-minute blocks essentially each day. I'm sure you've heard of the TPO stuff before for sure. But so I'm usually looking at if we like break out of any sort of ranged area. Well, number one, I'm always looking for wherever like that 70% value area is within a range, whether it's the day or the week or what have you. If we break out of those areas, I'm then looking at wherever the nearest area of value would be when we're looking to the left. So historically, so like for right now, for example, like today, relative value the past 4 days on the ES was like 6,400 to 64, we'll just say 6,430. That like 30 point range was where everybody felt super comfortable. And then there's a couple of extremes to the upside and downside. Once we broke through that value from these past 4 days, I was then looking for the auction that was on the July 23rd. That was kind of like a trend day. And I just wanted to look at where the relative value or distributions of volume and time were on that day and where we could possibly dip into and settle down for like comfort purposes, where people would feel comfortable stopping the bleeding essentially. And for that, and in that analysis, I was looking at, for the ES, I was looking at 63.64, which is where point of control was on that day. And then and then 2 sessions before that, when we were making all-time highs at the time, the point of control was also at 63.70. So anywhere in that area, I was thinking, okay, that might be where we settle down and then just more volume takes place and we trade in that area. But the only thing is there's only so much time left in the day after the Fed meeting to even trade there. And with the earnings that just occurred, we immediately actually dipped into that area and then popped right back up. So that's kind of my thought process, is I'm just looking at the auction sessions on the TPO charts and gauging where value is.
Yeah.
I can add a little bit. On Fed days, what normally happens, if you go back multiple Fed days, the basic pattern goes like this. The first reaction is wrong, right? And we talked about that. We go down, you snap up, go down, and then it sort of equalizes and it goes in a direction, whatever direction. And today it was down until the very end of the day when we had earnings. But what happens the next day is usually the opposite. So whatever direction after the Fed's done, if it's up or down, the opposite direction will happen the next day. So this is a weird one, because right at the end of the day, we kind of went back to neutral, and then we had the pop of the earnings. So it's like, what am I going to do tomorrow? But if I just take it on a kind of what happened, they sold off. So if they do the opposite tomorrow, it'll be an update tomorrow. If that pattern holds. The other thing you kind of can also do is, you just look at the Fed day as a complete, mulligan. It's just a random day that means nothing. And, you can't read anything into it. You just see it as a blip on the screen. And I think that kind of highlights the fact that anything that happens on any given day is just a blip on the screen. So maybe we shouldn't over analyze or over think it, right? Obviously, the earnings changes the big picture, because the market is ultimately a mirror of earnings. If we have earnings to justify high prices, then high prices will stay. If earnings show lack of earnings, if you just look at the very, very big picture, and I'm a big PE, price earnings per share guy, and making sure when the markets get above 22 to 24, you start thinking, okay, we're getting over valued, right? But here,
you sound like a value investor.
I'm just looking at the macro view. I'm not looking at the intraday, right? The macro view sort of says, with these high earnings that just came in, it's saying to the market, we have earnings to back up our stock price, which justifies the market being at these levels, which to me changes the story. Because up until this point, I was thinking the market's topping out. We're going to retrace 15, 20%. Tariffs, I mean, I can list all the reasons why that's the case. But killing it on earnings just supports stock prices. So that's my 2 cents worth.
Yeah. No, yeah, it's exactly right.
Tony?
I mean, it's a great way of looking at it. It's kind of like a holistic combination of kind of what you guys were talking about. I mean, of course, it's always the old adage of You don't know what to do. You don't know where it's going. Well, yeah, it's time to look left. Like that's what they always say, look left. Like see where the next level is, you know. But yeah, I mean, for me, kind of on a shorter time frame, yeah, that's one of the first things that I'm going to be looking at is kind of like fib levels, longer term support resistance levels, but also, you know, kind of what you guys were talking about before, you know, especially Troy, where it's one of those things that you have to understand why the move is happening. So, you know, you don't want to be stepping on the train tracks when the train's coming through and not knowing like why the price of this underlying commodity or futures contract is moving that way. So yeah, I mean, I kind of just look left and just start looking for levels and try to identify some longer term Fibonacci support levels or resistance levels, and kind of just go from there. You know, and that's what all it is when you're just trying to paint the picture to try to find your level, find your spot. Don't just blast it out to the market and kind of flip a coin. Actually, some people might actually that might actually be a good strategy for them. You know, especially when your win rate is only like 15%. You should probably just flip the coin. Yeah.
But no, I think that you summarized it really well, Tony. That you throw levels on, and what do we do with those levels? We try to come up with a bias looking at the macro view and looking at longer term charts, but it's just a bias. The levels we throw out there are places where we're going to identify, is the market going to respect this level? Is that support really support? Is that resistance really resistance? Are we going to, if we break above, is there flow to prove that there's momentum to push it higher? And the essence of a day trader is to react to those levels. And our job is twofold. First, our job is to find, and really we can take the whole bias and throw it out the window. You should have no bias coming in, but you should have lots of levels. And then you just evaluate those levels on a daily basis, hourly basis, and make trading decisions based on order flow and those levels, right? I mean, that's what I try to do. I love having a bias because it gives me, I want to be long today. Okay, I'm looking for longs, right? It gives me a bias. It gives me something to, be aggressive with. That being said, really what I'm doing is I'm shoving that bias out of my mind and looking at those levels and saying, is that resistance? Are they really going to hold that? If they're not, I'm going to short it, right? If they're going to blow through it, I'm going to go long. And so we're constantly reevaluating the struggle here is to, all of us need to be looking and trying to find levels that one of us overlooked. Obviously the POC, the value area high, value area low, we all are looking at those, but it's hard. A Fibonacci, you can draw it 50 different ways. So you might have a Fibonacci at one place, I have it at another place, different time frames. But that's the advantage of us four working together is we all have levels. We've independently decided our levels we're looking at, and we share those levels. And then, between the order flow and Sam getting all excited about a trade, we can then, make a trade, make a decision as to, and then if Sam gets in it, even if it's only for 10 seconds, he's going to talk to it. And so sorry, Sam, I have to harass you a little bit.
I like it. It's fine. You can harass me.
Hey,
I do.
Troy isn't in much longer. Sorry, Sam.
Apologies.
I didn't know. I'm not.
Unfortunately, they're having some difficulty. They can't reinstate this chat at this moment in time. So unfortunately, we won't be giving away the 50K account in this session. However, we are going to make it right. In the Futures Kickoff tomorrow, we're giving away a 25K account and a 50K account. And then later on in the closing call, kind of a back to trading segment, we'll be giving away another 50. So we do apologize to all the viewers. I know you can't interact with us. It sucks. There seems to be some issue. They're trying to work on it, but they're having no luck at this moment in time. And since we're leaving in about 10 minutes, it might not happen. So we do apologize to everyone. we will make it right tomorrow in tomorrow's stream. So do
Nice.
do tune in then as well. Sorry, guys.
No, that's great. That's good. Definitely make it up
Hey,
to them.
when we have a technology problem, let's talk about that, because as traders, I mean, I know you guys can see my office, but what you can't see is that under the desk beside me is an 8-hour battery backup. So I can run for 8 hours if the power goes off. Okay, now that may be extreme, but the point is that there are certain things you can do as a trader to minimize technological problems like a power outage or an internet outage. The other thing I have in my house, I'm in the basement, but I have a room, a little closet that I've turned into my network room, and I've got fiber coming in and cable. So I have cable internet and fiber, and I can walk in there and switch over. So if one goes down, I just walk in there and flip it over, and I've got internet again. So, and as a backup, as a third backup, I can use my phone and connect to my phone wirelessly as a tether. So this is a horrible backup. It's going to be very, very slow. But my point being is that you should always think about the possibility of losing power, losing your internet feed, and then having a plan on what to do. Even if you don't have, like me, I'm an idiot. I buy a giant battery backup. Maybe you don't do that, but you should still have a plan in place. You know what the number is to the broker. How do I call to cancel this order? You shouldn't wait till it happens and go, how do I call the? You should already have that listed. I have it on a yellow sticky. I have it on a yellow sticky. It says my account number. It has the trading desk 1-800 number, right? And if I go down and I'm completely down and I'm in the middle of a position, I'm on speed dial. Hit that button, call them up, cancel, right? You should have that plan in place. It doesn't happen very often. In fact, I don't think I've had a down day because of technology in just a long, long time. But I've got 2 internet feeds coming into my house. I've got an 8-hour battery backup if the power goes up. So it is what it is. But I think every trader, you should have a plan. If nothing, make sure you have that telephone number, your account number, any kind of password ID, so that when you get on the phone, you don't have to go, where's my account? You're like, my account is da 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 da. Here's my PIN or whatever your security thing is. Cancel my order. Get me out, right? So I think that every trader at least needs to go through this process. Okay, so we went down. Well, luckily none of our computers went down, at least individually. I know I had prices coming in the whole time. So, but have a plan in case that happens. Even if it's only, I have my phone number, my account number, and that process.
Yeah. Couldn't agree. The battery backup, especially like you can go to Costco and get one of those usually for a really good deal, a good battery backup. I have one as well. I have an 8-hour one as well, Troy. I think it cost me I think it was somewhere around $150 or something, but from Costco. So not terrible. I think I also saw I'm in Orlando here, so I think I saw Troy at some point go to the Kennedy Space Center and launch a satellite so that he has a 7th way of getting to the internet if he ever needed it. So he has a personal satellite as well.
I know that it's funny, but my entire livelihood is dependent upon that connection. Whether I make money or lose money is entirely dependent upon me having access to the internet. So, I know it sounds crazy. I've got 2 ISPs coming into my house, but if I go down for a day, that's not getting paid. So, it's really it's a big deal. So I take it serious. And by the way, my 8-hour machine or backup is about 15 years old, and it cost me over $1,000. It's a big one. Yeah, and I can run all all 18 monitors and 6 computers on it.
Mine might not actually be 8 hours. It might be less than that. I think it's actually less than that, but it's a decent amount of time though. But that's pretty crazy. 15 years and it's still running strong. That's awesome.
Yeah, I've had to replace the
Nice.
internal batteries a couple of times, but yeah.
So there's no excuse for you guys to be late for work.
Uh,
You're always connected.
Exactly.
No, but yeah, you got to have I forget what they call it. It's like, it's not like an end of days plan, but it's like a catastrophe plan. Like if something happens, like yeah, you got to have
yeah.
contingency. Yeah. No, it's all about being prepared. It's like trading. It's always having a plan.
Hit the nail on the head there. I think that's exactly right. Because there's nothing worse than like just having like, especially for me, like my power company, I learned the hard way like 3 or 4 years ago. It was roughly like 3 or 4 years ago. Surges started just coming through randomly, like almost on a daily basis, and I was like, I can't deal with this. This is literally the worst. So immediately got a battery backup, and I've never had a problem since. But it's just like a 1 second surge, and then all of a sudden everything disconnects, and then it's reconnecting, and that 1 minute of time or whatever can really cost you. So can't have it, can't do it.
And your laptop plug, if it surges, sometimes you have to actually physically unplug it and let it sit for 2 minutes before you plug the power supply back in, because it's taken a hit. I found that happen several times. You're like, I can't get it to come back up. It won't come back. And it's like, unplug it, wait a few minutes. And then it's a safety feature that's in that, in your laptop, it's got that little box, the little power box, and that's got a safety feature in it that sometimes it'll trigger it. And once it triggers, it's basically turning itself off from the power. So you have to physically unplug it. So you disconnect it from the power and then wait like 2 minutes and then plug it back in, and it'll reset itself. But I didn't even know that for a long time until I actually had it happen, and I was freaking out,
Right.
Okay, well, we got a couple of minutes, not even, left. Up next, we're going to have a quick news segment where we'll go over basically all the updated stuff from the FOMC, etc. And then we will have the Prime Day wrap-up with myself and Coach Troy. So yeah, stick around, viewers. Hopefully... We do apologize again for the little mishap. These things happen, sadly, sometimes.
Yeah, of course it happens on FOMC day. The crazy stuff happens on the crazy day, so it's fitting.
It's okay.
Yep.
It's good enough,
That's just
last
how it
20,
is.
30 minutes of the day.
Yeah.
You don't want to take a trade and get caught offside, so it happens.
Yeah.
Everything happens for a reason, right?
Yeah.
Exactly. Oh, well, coaches, it was a good little trading session. Tony, great first day, I have to say. Fantastic first day.
Thank you.
It's like you're part. It's like you've been here for years. So really, really good.
Yes. Like I said, I know that we have a little bit of time left. I've been watching you guys on the live stream, like studying, and so like I said, the simulation is pretty easy, and like you guys are really inviting and helpful, and I appreciate all the info and look forward to learning about how you guys trade more and doing more trades along the way.
Awesome.
Same here.
All right.
Well, that's awesome.
Same.
And to everyone watching, thank you guys for tuning in. Stay tuned because we do have the Prime Day wrap up after the news. But Paul, Tony, I'll see you guys at some point later. I don't know your schedules just yet, but yeah, I'll see you guys soon. Troy, I'll see you in about 5 minutes.
Okay.
See you guys.
Have a good one. Good afternoon and welcome to your Federal Reserve market update for Wednesday, July 30th, 2025. The Federal Open Market Committee has voted to keep interest rates unchanged at 4.25% to 4.50%. This marks the fifth consecutive meeting with no rate change. The decision was not unanimous. Two Federal Reserve governors, Michelle Bowman and Christopher Waller, dissented and called for a 25 basis point rate cut. This is the first time since 1993 that more than one governor has dissented at the same meeting. The FOMC statement noted that economic growth has moderated in the first half of the year. Despite that, second quarter GDP rebounded with a strong 3% annualized gain. The labor market remains solid, with unemployment holding near 4.1% and job creation averaging 150,000 per month. Inflation remains above the Fed's 2% target, with core PCE inflation sitting between 2.5% and 2.7%. The Fed emphasized its commitment to data dependency and maintained that future decisions will depend on economic conditions. It also pledged to continue shrinking its balance sheet in a measured and transparent manner. Chair Jerome Powell reinforced the Fed's independence and stated that monetary policy will not be swayed by political pressure. He described current policy as restrictive and appropriate, but open to adjustments based on future inflation and growth data. Now let's take a look at how markets reacted to today's announcement. US stock futures initially moved higher but reversed course following the release of the FOMC statement. The S&P 500 fell by approximately 0.4% by market close. The Dow Jones Industrial Average dropped by around 343 points as investor sentiment turned cautious. Bond yields initially fell but quickly rebounded after Powell's press conference. The 10-year Treasury yield rose about 5 basis points to near 4.37%. In currency markets, the US dollar strengthened sharply. The dollar index gained nearly 1% as traders reassessed the likelihood of a near-term rate cut. The crypto market saw a broad sell-off following the Fed's announcement. Bitcoin fell roughly 0.9%, trading just under $118,000. Ethereum, XRP, and Solana dropped between 2 and 3.4%. The pullback reflects reduced risk appetite and disappointment over the Fed's cautious tone. A newly released White House crypto policy report also added uncertainty, especially regarding future regulatory oversight. Market participants are now shifting focus to upcoming US inflation data and the non-farm payrolls report. Odds of a September rate cut have dropped from around 65% to just under 50%. Traders will also be watching the Jackson Hole Symposium in late August for further guidance from the Fed. In summary, today's FOMC decision underscores a cautious and data-driven approach. Despite internal dissent, the Fed remains focused on inflation control and financial stability. Markets are adjusting to the reality that rate cuts may arrive later than previously expected. Stay tuned because up next we have the Prime Day wrap-up with myself and Coach Troy. Okay. Coach Troy, Prime Day wrap up. What a day, right? I mean, FOMC did not fail to not surprise us, but move the markets as always.
Absolutely, quite a exciting day. Actually, lots of stuff going on. A lot of firsts. We had the first time we've ever broadcast the actual Fed Powell news release. His after the FOMC meeting notes and everything, and have his press release live. That was kind of exciting, and watching the market while he's talking was insane. Also, we had some technical difficulties we haven't had like that ever before, and so it's just been a wild, crazy day.
It really has.
It is what
It really has.
it is what it is, right? We live to trade another day, right?
That's it, exactly. Well, what have we got tomorrow? Tomorrow, I think, is a bit of a hasn't got anything too major, but I know NFP is Friday. Let's have a quick look. Yeah, so tomorrow, in terms of the US dollar, we got core PCE price index, unemployment claims, employment cost index. They can move the markets. Definitely something I would avoid, but that is before the US Open. So, I mean, it wouldn't affect our trading session. But then, yeah, Friday, of course, NFP as well. Before US Open, of course, and we also got ISM Manufacturing PMI. NFP being the big one. But then, well, then it's Friday and it's the end of the week. So going through to August, what do you think? Do you think, I don't know.
Well, I've been surprised. I've been surprised with July because, usually, the old saying, sell in May and go away. June, July, August have always been, very flat, very volatile, sometimes volatile, but usually not a lot happens in the summertime. But yet we've been hitting all-time highs for several weeks now, continuing to make all-time highs. And so it's kind of been kind of weird. Volume's been low. I would say kind of maybe below average summer volume, but low volume. I'm looking forward to the end of August when we get into September and volumes start picking up to where they were, prior to. And how we talked in the last session about how important order flow is. The more volume we have, the more data we have to, assimilate and I always say you can never have too much data, but you can never have too much order flow because that's really the pulse of the market, and the more we have, the better it is to guesstimate what's going to happen or what should happen, at least in the immediate future. But August, we had a heat a heat advisory yesterday and today here in Tennessee, and it's starting to get ugly hot wise, and I can just it's that whole summer I'm hot thing going on. I'm sure everybody's experiencing that worldwide as global warming creates issues, but I think August could be an ugly month. August is traditionally has been a good month for me. July always usually kind of a crappy month. June's a break-even month, but usually lose money in July, make money in August, really start making money in September. October's good month as well, but more traditionally more break-even. November, December are off the charts. December has always been my best month of the year. I'm not sure why that's the way it is, but August can definitely be a difficult month. So, I don't know if that's just 25 years of trading talking or if there's something going on, in August. But I can't say I'm upset about seeing July go away.
No, yeah, me too. I don't know. August, I think you're right. I think it's going to be, I don't think it's going to be much of an improvement, sadly. But, look, it's good to kind of have this discussion. If it beats our expectations, great, but it's better to lower our expectations for August and be surprised rather than be disappointed. So, yeah, September, unlikely apparently that rates will be cut again in September. Well, not unlikely, but there's, I think, a 50-50 chance or so. It's the probability at the moment. So maybe that revelation might give the market a bit more clarity, because I feel that before it was more leaning on the side that, okay, September is going to be where the rates are going to get cut. So I don't know, maybe it's just bought you more time as traders, so that going to be less kind of scared about the whole, put less emphasis essentially on the whole rate cut from now. Maybe I don't know. I'm just talking a load of nonsense
I was
probably right now.
sort of, yeah, I get it. I was kind of remembering one of the questions they asked Powell about interest rates and housing mortgages, and how he kind of said, well, we really don't control that. The market sort of establishes those rates. But I got to thinking about that, 7%, and you're going to laugh, but the very first house my wife and I bought was in 1993,
Oh, wow.
and our mortgage was 10.75%. 10.75%, and we had only been married a little while, and we both had really good credit scores, and so we actually qualified for about 0.5% less than most normal borrowers. So we were at 10.75. Everybody else was at 11.25%. And you know what? It never even crossed our minds that was high interest. I mean, it was obviously in that era, in the late 80s and 90s, interest rates were coming down and had been very high, historically high, above 15%. Mortgages were, very high, and we thought 10.75 was great, and we were so happy to get a loan to buy a house. And it just kills me when I hear somebody go, 7%. Oh my God, it's so high. I'm like, God, you guys don't even know what you're talking about, Now, granted, since 1993, we were able to, sell the house, buy a new house, sell the house, buy a new house as we moved locations, and the rates came down. And the house I'm in right now, we purchased in 2001, and it's at 3.75%. And I'm not paying that thing off because why not? Just keep it, right? I mean, I can put my money in the bank and get more interest. But that was in 2001, 2002, and it even went further down from there. It went down. Some people were getting 2.5 to 2 7/8. I think that was kind of the bottom of the mortgage market. But and I get that the reference point, if you are young and you knew there was 3% mortgage rates, that 7 seems obscene, right? But my reference is our first loan was 10.75, and and we didn't even think anything about it, at that time. So it's kind of strange how your perspective turns. But I thought that was an interesting comment that the Fed does not do anything. It doesn't try to influence mortgage rates at all. It just sets that Fed funds rates, and then everything keys off of that. The Fed rate is basically becomes the risk-free rate, and then so everybody else has got more risk, right? Nobody but the Fed has a zero rate or zero risk, and so it just pyramids off of that. And I know 7% may be high relative to what we've seen, but it wouldn't have been a factor in whether I would have gotten my first home loan or not. I would have paid 15% if I had to, right? You didn't have choices. You had to buy a house. I mean, otherwise you would don't have nowhere to live, or you'd pay, for
Yeah.
an apartment or whatever. But it's kind of an
I
interesting.
feel
I heard
even
that
I
guy
feel
talk
though.
about. Go
Sorry, I
ahead.
didn't mean to interrupt. I feel back then though, people had more disposable income as a whole. I mean, housing prices were, at least in the UK. I don't know how badly it's affected in the US, but in the UK, for example, the average wage to the average house price was a lot closer back in the 90s, whereas now it's gone up tenfold. So even paying 15% back in the early 90s was doable for most people. It wasn't. But I think if they put it like if it was 15% now, oh, people would completely. I think they'll burn down the Houses of Parliament.
Yeah.
They'll protest.
Yeah. Yeah.
Yeah.
Yeah. Yeah. And I think prices are, especially for your generation and younger. The housing prices are artificially inflated, or not artificially, they're just inflated compared to what they were, and wages just have not kept up. um,
Yeah.
yeah, it's crazy. um, I
That's
have
where
a
the world's
daughter, she's
moving to.
20. My daughter's
Carry on.
24,
Sorry.
and I'm
No, no.
like, she's like, how she's, I can't afford a house. And I bought my first house I bought at 23, 24 years old.
Yeah.
uh, So
Yeah.
yeah, it's
I feel it's almost
housing's
by
I don't know,
design.
housing is a problem in the UK as well, right? You guys have got crazy,
Oof. Yeah.
hard to find a place to
Ridiculous.
rent.
Yeah, it's insane because I feel it's almost done by design. And I don't want to get into conspiracies or anything, but it just feels like that's the way the world. Everything is becoming more. You rent something, you don't fully ever own it. You're, I think we had this discussion yesterday on stream, where we're talking about like everything is like a service now. It's like a monthly subscription service for everything. You know, um, if you go to a car dealership and you want to buy in cash, they don't like it. They want you to
Oh yeah,
take out finance. Because they
yeah,
make a killing from it. Everything has become just borrow, borrow, borrow. Never
yeah.
really truly own anything. Lease it rather than own it. And I get that there are some benefits to not owning something outright, especially like a depreciating asset like a car. But it's happening almost across everything, and I feel we're going down that route more in the Western world where, unfortunately, I think in the next generation or two, only the very wealthy will be owning homes, and the mass majority are going to be renters. Because I just can't see it. Like, all right, our generation, millennials, we had a bit more of a buffer time, but I think the generation after us, I don't know how they are going to afford homes when they grow up to be, young adults. They're going to have to wait until they're in their 40s or 50s to potentially get a home. It's just
Yeah, yeah.
I can't see it working out unless something drastic happens. It just doesn't
Well,
make
I
sense.
think we see that in the U.S. also in the fact that cars, not my current car, but the car before that was a Lincoln Navigator. It's a big SUV,
Yeah.
and I paid 88 grand for that damn thing. And that's like, it's becoming to the point where it's cost prohibitive to own any kind of car. I mean, 100 grand, 150 grand for a car. It's like, what are we? And I think that's why the robo taxi is becoming a real idea, because if we had a robo taxi and they were, you could get around with. I mean, you take your car payment out of the mix, you might have enough money to buy a house, right? If you're only spending a couple $100s a month to run here, run there in a robo taxi, and you don't have car insurance, the car cost, car maintenance,
Hmm.
gasoline, you don't have all of that. I think the robo taxi is way ahead of itself in that idea, I don't think we're there yet, but we're certainly getting there where a very large portion of the population cannot afford a new car. And
No.
I just saw a lot of the tariff numbers from Ford, and Ford says that the tariff cost them 800 million this year alone, this quarter alone, and that's only going to filter down into more higher prices for cars. And you take
Yeah.
the inflation in cars, the inflation in housing, and man, you're hurting. That it doesn't matter what generation you are, you're hurting just to get
Yeah.
around. I think it may be the robo taxi is the answer, or the not having to own transportation. You're spoiled in the UK and in Europe. You guys have got mass transit. Here in Tennessee, dude, I got no mass transit, none, zero. There's just
Yeah.
nothing. If
You have to have a car. Yeah.
you get into the urban area, there might be a bus, or if you're lucky, there might be a train, but that's the exception to the rule. The U.S. is not at all set up for, everybody has to own a car or you can't go anywhere.
Yeah.
And we have Uber here, but it's not a big thing. Everybody owns their own cars, so
Yeah.
you know.
Yeah, no, I completely agree. I mean, look, mass transit, yes, I get it in very built-up areas like cities and stuff. It makes, like, if I go into London, it makes more sense I take the tube than drive. Because driving in London is just, you can't park anywhere. There's constant traffic. It costs ridiculous. They've got congestion charge, ultra low emission charge, all these different charges, cameras everywhere. If you park even slightly or stop ever so slightly, you get a ticket. It's ridiculous. You just cannot drive in London. End of story. And so in big cities, I understand, all right, mass transit, but there's still, like where I live outside of London. Realistically speaking, I still need a car. I mean, I can take a bus, but they're very unreliable. They're not very well looked after. It's not really ideal. We still do need your own personal vehicle, but they're taxing the hell out of cars now. Unless you've got an electric car, they're taxing you. Like I have an SUV as well. I have a Range Rover, and my God, has the prices of insurance, the road tax, fuel's always been expensive to be fair, but all the other costs related to it are just astronomically high now. I'm paying twice as much for insurance. No idea why. Like why insurance keeps going up on the car, I don't know. Road tax has doubled as well since I bought the car. It's just a complete. I'm looking to sell it now because it's just completely pointless owning that vehicle. It's just rinsing you dry, and for what? Barely get to enjoy it anymore. So yeah, it's a shame. It's a shame. I don't know. I don't. I'm a little bit saddened by how I can see the world is going to, in the kind of direction we're going. I understand. You know, things do have to change every so often, but yeah, I don't know. I'm not liking the direction it's going in. Personally, I think things are getting way too expensive. Inflation is out of control in the UK. Energy prices are ridiculous. Food prices are just constantly going up. Um, Everything is just ridiculously expensive. There's no bargains left anymore. You used to be able to, okay, that shop, they'll have some good deals going on. It doesn't exist. And then there's no shops even available anymore. I mean, everything's closing down because no one's going out and buying stuff in retailers anymore. It's just becoming an empty shell. Restaurants are closing down left, right, and center. I don't know. I really don't see a way out of the current situation in the UK. And I know America's taken a similar turn in certain areas as well. It seems to have similar problems. So I don't know. I think the major issue is we just don't make anything. We're just outclassed and outcompeted by foreign competitors, you know. And like you said with the car industry, like Ford having to take an $800 million hit, I don't think that's good for the US, because Ford is a huge car manufacturer. You want people to be buying Fords. You know, in China, their vehicles are becoming extremely affordable, and I have to say pretty damn decent. And
Yep.
it's not going to take much for people to start looking at the Chinese market and say, do I really need a nice Ford badge on my car? Am I happy to go with like a brand that I don't really, you know, doesn't have the same brand weight to it, but the car's good, it's comfortable, it does everything I need, it's well priced. It's going to happen. I'm starting to see, you know, Chinese cars on the roads now. Never saw it. 5 years ago, you'd never see a Chinese brand of car on the roads. Now I'm slowly starting to see them all popping up. And I don't blame people buying it, because why would you buy a European car, which are overly expensive? Yes, they have the kind of brand weight. You know, you'd rather be sitting in a Mercedes than, I don't know the Chinese brands' names, but, you know, than some unheard of brand. I get it. But when times are tough, you're just happy you got four wheels and a steering wheel. So, you know, as long as it's reliable and does its job, most people are going to opt for the smarter option. So yeah, we're being priced out and outcompeted, and that's essentially what I think is the issue, especially in the UK. We don't produce anything of serious value anymore.
Yeah, I mean, you know, you guys have a rich history of being some of the, you know, the greatest manufacturing. You used to, well, America started with supplying, you know, London and others, you know, Britain, with raw materials, everything from cotton to lumber to, you know, wheat. And you know, we've gone
Mm.
through the same rotation where at one point we manufactured everything, and now we've manufactured very little. Um, and our economy is a services based economy, which is extremely vulnerable to wages and to, you know, employment. When people, you know, when somebody gets laid off here, what happens? Well, you get laid off. The first thing you're going to do is you're going to not have a maid. So that maid gets laid off. You're not going to have a yard guy. That yard guy gets laid off. You know, it's this big trickle down effect of all these different services. You know, if you've got a car that needs a new paint job, you're going to put it off. Say, no, I'm not going to get it repainted. I'll just live with it for another, you know. And so, you know, you have this big trickle down effect. And to me, that's the biggest weakness of a services based economy is wages, or, you know, the wage, people being employed. Because once that stops, then, you know, or slows down, you know, the entire engine starts to slow down, and there's you know, the trickle down is can be, you know, you'd think that the guy mowing yards is the least impacted, but he's probably one of the first ones, because when I think about how much I spend on having somebody mow my yard, which in the past has been my son, and now it's me, so every Saturday now I'm mowing, you know, but I save myself, you know, $250 a month by mowing my own yard. uh, and so
Yeah.
I'm sort of incentivized to a certain degree. But that would be the first service I would cut. I would cut that and start doing it myself. Um, you know, as you know, you start contracting. Where do I? We use all kinds of services. You know, we're a service based economy. 70% is services. Uh, I don't know. I mean, I understand what you're saying. It's like there is definitely a societal topping out, if you want to call it that, where our standard of living has sort of topped out, and now we're sort of trying to decline in a way. And
Yeah.
you definitely see the fringes. You see the rich getting richer, the poor getting poorer, and the middle getting squeezed, right? Um,
Mm.
and I don't know what the answer to that is, but you know, you have to flip that around and say, Well, that's also the same economy that's made it so I can spend $500 on a gaming laptop and $50 a month on the internet, and dude, I'm ready to go. I'm ready to trade. Right? So
It's
some of
true.
those things that we are, upset about have developed so that there are other opportunities. I'm not saying that everybody should be a day trader. As you know, it's not a simple job. Probably the hardest job I've ever had, because uh, I was a contractor building houses and doing remodeling in my younger years. And what I loved about that job is at the end of every single day, I could go, see what I did? There was accomplishment, and you saw it every day. You felt like, hey, even if it was a crappy day, you still got something done. You still put a nail in a board, right? You did make some, even if it was limited, you always made some progress. Trading's really hard because as soon as this day is over, you're thinking about something else, and you don't think, look what I did. You're just like, oh, I got to do that again tomorrow. It's not the same. It's not tangible.
Yeah.
Uh, so it's hard. It's a hard job, and I don't think anybody, unless you are actually a trader, understands the mental gymnastics that your brain goes through, the debilitating losses. You hear that phrase, debilitating losses, and nobody, oh dear God, you lost $1,000. They don't understand. It's like ripping you. It's like getting your head in the vice and it starts squeezing your head. It's this mental fight. You're fighting yourself, and certainly nobody understands that unless you have been a trader. And it's hard to be able to push that emotion out of the way. So certainly we have opportunities to make a lot of money, but it always comes at some sort of cost. Sometimes I wish I had a job I could just clock in, do my 4 hours, and clock out, and not have to think about anything, and know that check is coming in no matter what. That would be great. But unfortunately, I don't know how much money I'm going to make tomorrow, or if I'm going to give money back tomorrow, right? So it's a hard job, but and I think that
Yeah.
we are moving towards a economy that is a gig economy where everybody is independent. They
Yes.
all do their own things, and there's certain advantages to that. You can work as much as you want, and the more you work, theoretically, the more money you make. Where a lot of times, if you're a salaried person, you can work your butt off and you don't make any more money. You know, um, I think the gig economy allows you to at least get paid, um, you know, for your time. Whereas, if you're a salaried person, man, you're just screwed. You're going to work 40, 50, 60 hours, and the money's the same. I don't think that's very fair, and I've done that for years. I've been, in a management where you got paid a fixed salary. The gig economy allows us to make money, based on, contract. And I think that now the downside is you don't have any benefits. You have to pay for your own benefits, but I would rather pay for my own benefits and have control over what's going on, who I'm working for, instead of being in that dead end job that you have no control over your destiny, and you're the bottom guy at the totem pole that's going to get crapped on every time the big boys say, oh, we need to do a layoff. They don't say, we're going to do a layoff and we're going to cut the fat. No, they never do that. They just cut indiscriminately, and they always cut the lower rung that does the work. And there's like, wait a minute, you're going to cut these people? They're the ones that actually do the work. Oh, it's a
Yeah.
messed up society. Sometimes I think it is really messed up.
It really is. I think one thing we should be focusing on. I'll say one of the biggest problems. Look, there's no changing it in the immediate future. It is what it is. Um, there's no magic button, magic switch that the government can switch on, and all of a sudden everything goes back to normal. Um, but one thing is getting an entrepreneurial spirit drilled into the newer
Yep.
generation, to the next generation.
Yep.
The kids today, we've you know, you got to look at the world as as your competitors, and probably the biggest competition would be countries like China, right? They're really drilling into their children, you know, to their kids, you know, all about engineering, you know, becoming a doctor, really like trying to push educational stuff onto the younger generation, right? And then we look at our generations, and it's just, I hate to say, but a lot of it's just garbage. These, you know, and I get it. Like, all right, they're kids, you know, they're gonna have fun and play, and that's all well and good. But there is a lot of just absolute garbage out there, and I think, you know, with all this short form content, TikTok and stuff like that, it's rotting their brains from such a young age. As sad as it sounds, maybe I'm completely wrong. Maybe they'll grow up and, you know, and God knows what, but I just can't. I don't think that's healthy, and I think there needs to be that kind of, like, that entrepreneurial spirit in the next generation, so they build the next Apple, the next Microsoft, the next Nvidia, the next whatever. Do you see what I mean? That's what the UK needs. We don't have even a single major tech company. I think maybe Dyson is probably our only like big kind of, you can kind of class as a tech company. But I can't think of a single like big brand. You know, we're all service industry based, and most of our big kind of like financial services are all foreign owned as well now. So there's just nothing there anymore. No one's making business in the UK. Do you know what I mean? No one's starting something big up, and if they do, the way our system is set up is it's not very beneficial for someone to even start a business in the UK at this moment in time. You know, you get taxed through your teeth. You know, taxes really is pretty high. There's no kind of incentive as well. Everyone's going to Dubai and the UAE, where there's zero income tax, very low business tax, corporation tax. You know, everyone's moving over there. All the wealthy people, even in the UK, are moving over to like the UAE and places like that, and I don't blame them one bit. I can see 100% why you. I mean, why would you stay here? You know, it's cheaper to live there. You live at a much better quality of life. You don't pay any taxes. You got, some people would say it's not that great weather because it is really hot, but generally speaking, you've got nice weather. You've got a million and one things to do. Of course you're going to go over there. Why would you stay here? There's nothing keeping people here. You know, the only people who are staying in the UK are the people who can't leave at this moment in time, but everyone is trying to jump board at this moment in time. So, yeah, it has to start from a new generation, I think. That spark has to reignite and build something, you know, make something. And the government should be supporting young entrepreneurs, get them into the business, start investing in good ideas, become angel investors essentially to your own people and to your own, you know, homegrown companies. And that I could see would have a good effect in the next few decades and down the line. But apart from that, I think it's all going downhill, sadly. And I hate to sound so critical of it, but it really is. I've seen it in the last 10, 15 years. It's just been a steady decline. And then COVID and Brexit and everything just declined even quicker. And, you know, everyone's blaming each other. And the reality is it's not just one thing. It's a concoction of things. You know, it's a cocktail of issues right now, rather than just one singular issue. But yeah, it is what it is. So I just feel bad for the newer generation.
Mm-hmm. Yeah, no question. No question.
Yeah.
So, what are your what's your takeaway from the Fed today, and what do you think a longer term macro view is going to change, or um, you know, I don't know. I heard several things today from the Fed. At least what I interpret is that once again we're doing nothing. We're going to wait and see until we either get inflation is worse or not, and we're either going to get better employment or we're not. And if either one of those pan out, then we will see a rate cut. If neither one of those pan out, we may, for a brief moment, he did say the word, we could raise, and the market did not like that. And even though he said it kind of in jest, like, hey, we had some numbers that were not good, and we refrained from raising rates. And the market kind of went, what? Wait a minute, and I hate the wait and see. I just hate it. I understand why it's necessary, but I really hate it, because we just need. I want to move past some of the drama, and as well. I mean, you're on the outside looking in. You must look at America and go, dude, you guys have got so much drama going on, but every country has a massive amount of drama. When we were in, like I said, in January, when we were in Portugal, I said something to our Uber driver, and they were like, well, I said something about our drama, and she said, well, that they just, that we've voted, that Portugal has had the third government in like 3 years. They've gone through 3 different groups, 3 elections, or I don't know. I don't understand all that stuff, but I'm like, what? 3 distinctly different governments in like 3 years? She goes, yeah, we have an election like every 9 months. So there is this drama is happening, worldwide because, I believe it's because of the debt. It's all the government debt is creating a non-sustainable situation in every single country. And, they're doing everything they can do to stop that flow of debt. Like I said, in London, they got taxes. There's a fee for everything. We're getting the same thing. In the U.S., most roads are paid for by the state or a local county or the federal government, and everybody gets to use the roads. Well, in the last 10 years, we've seen this explosion of, we call them turnpikes, where you have to pay to use this stretch of highway. And so it's in a way, it's great, because that means if I never use that stretch of highway, I don't pay for it, right? But if I have to use that stretch of highway every single day, man, that's a giant cost on, the transportation. So we're going, the government's doing everything it can to not be in the business of building roads. They want to let somebody else do that because, we don't have enough money to build roads. And the debt is, I think, worldwide, we've just got this massive debt that's really putting pressure on every single economy. And it does that through taxes. And, the 1 or 2 countries that are smart are going to have, like Dubai and the EAU, and they're attracting the youngest, brightest, and they're giving them no taxes, and they'll, those economies are going to mushroom, while the rest of us are stuck trying to pay off this giant frickin' debt. I mean, in the U.S., of course, is leading the world in debt. Not to say that Europe's not that far behind, and the UK as well, from a percentage basis. Your debt to GDP ratio is not that far off of ours. Ours is just such a big number; it sticks out, right? But and until we can get some political resolve to say, okay, how do we grow our way out of this? And this is what we've done in the past. We lower taxes. We try to stimulate entrepreneurship, and we need more of that. And what we're getting is less, and that unfortunately is going to take time. We can get those people out of office, and we can then say, okay, really, we need to stimulate growth. How do you stimulate growth? You take these young kids coming out of college, and you say, that's a great idea. We'll finance that for you. And let them take off and do the next big thing. Make the next sham wow, right? Or the next whatever. and let those kids come up and make something and grow things. And um, there's a reason why manufacturing has moved away from the UK and away from the US. We became, as a country, we became more educated, more white collar, and we didn't want to do those blue collar jobs, and so there's less labor available to do those jobs, and those manufacturers said, I don't want to pay a white collar guy out of college to dig ditches, even if he would. I don't want to pay him what he wants, right? It just doesn't make sense. It doesn't match. And so we get this problem where, immigration becomes a major deal. And you guys in the UK have lots of immigration to do the jobs you guys don't want to do, right? And then what happens is then you get mad because there's no jobs and you say, okay, no immigration. So then we're doing the same thing. We cut out the immigration, but nobody locally wants to do any of those jobs. So then the price goes up because you're having to pay. Now the local guy says, hey, there's nobody here. You want me to dig a ditch? Sure. Pay me. I'll do it. Right. And, everybody's inflation then goes up. So it's kind of this round robin, nasty kind of problem.
Well, but that's the beauty of being a trader, I guess. Regardless, even if the world's burning outside your window, as long as you have that chart and a computer and an internet connection, you can magic money out of nowhere. And that's what I love about trading. It's just, we don't even make anything. We don't build anything. We don't do anything. Yet somehow we can just magic money out of thin air. I mean, that's a pretty cool job if you ask me.
It is.
Well, we can
no doubt
pretty much wrap it up there, Troy. I think I think we can wrap it up there. So that was an awesome session. I'm excited for tomorrow, see what happens. And hopefully August is a better month. But to everyone watching as well, thank you guys for sticking around.
Remind the guys watching that we got 2 giveaways tomorrow. That's pretty big.
Yes, we do. That is it. Because we couldn't give away the $50,000 account in today's session because there was some technical glitch with the chat, we are giving away a 25k and 50k challenge account in the Futures Kickoff segment, so just when market opens. And then later on in the closing call segment, we'll be giving away another 50k account. So we're giving away 3 accounts actually tomorrow. So do tune in. Your odds of winning are higher than ever. But yeah, thank you guys for sticking around. We do apologize for the little technical glitch we had earlier. But yeah, have a great rest of your evening. And we'll see you all tomorrow. Thank you, Troy, as well.
Yep, I'll see you tomorrow too. Tomorrow and Friday, I'm covering for Daryl.
Ah, yes, you are. Oh. Awesome. I'll see you then.
All right. See ya.
Hola Prime. Trade with transparency.